Welcome back to Friday Crypto, another Bitcoin daily update. On this video, we're going to be focusing on the monthly Bitcoin USD chart. We're going to look at a couple key things and keep it nice, short, and sweet. Look at an indicator at the end of the video if you're lucky. So let's get right to it. Our drop zone here, right? Why this area, right? This is the next logical level of support based on TA alone. Not my opinion, not someone else's opinion. Based on this chart, if you didn't know what you were looking at, you don't know this is Bitcoin, this would be the area, right? Because your previous all-time high closing candle set back in 2017, the close was right there, right around 14K, right? Not only that, but you had another kind of the summer bubble of 2019 after our bear market closed right there as well. And not only that, but you had several more monthly touches right around that area, including right before our bull market, blast off, lift off. So right in there from 14K to, roughly 11K is the likely scenario, not on anyone's opinion, but based on TA, that's likely the area that we're going to need to test sometime in the future, right? In the next several months, maybe. So let's look at 2018 and see if we can see any similarities. Notice all our moving averages here, right? So what do you see here, right? You see, look at the 8. The EMA 8 is in the red, right? And it crossed the yellow just after. What caused that, right? This big red candle. Notice how it crossed under the 21-month EMA. They're on the monthly chart. Each candle is 1 month. Okay, go back to 2018. What do you see, right? Something very similar, right? Look at that candle right there. We had a big candle, which is what causes the EMA 8 to cross the 21-month EMA. And then what do we see happen, right? Big red candle, 21, the 8 month crosses the 21, big red candle, right? Going back over here, big red candle, 8 month crosses the 21, and then what happens? We have a bottom. Well, now, hindsight's always 2020, right? We don't know what's going to happen, but back here, right? So far, we're looking pretty similar, right? A drop down consolidation. We had a big, red candle that causes the 8 to flip the 21. And then we have what? 1, 2, 3, 4 months of basically nothing. Calm after the storm, right? Everyone gets bored, right? But this is exactly what is needed to build for the next run, right? So after your big bottom, you have this kind of this bull area, right? And basically from the price that bottom candle is, that's the price 4 months later. So go with me on this and let's see what we would look at, right? So if we're looking at something similar, right? History doesn't repeat, but it often rhymes. Maybe we come down in something like this for the candles, but maybe our wicks end up touching down here. And what else do we see? Look at the median Gaussian channel line here, right? The median line is the center here. That is right at the top of that channel. So that would likely be there still in the next month or two. So if we end up coming down this month, next month, maybe we tap, 14K, 13K or wick lower, but our candles seem to close maybe just a bit higher. So maybe something like that. And then what, like 1, 2, 3, 4, right? We're looking at November, December before we really can recover. Maybe it's longer, right? Maybe it's a little bit more drawn out. Maybe it's shorter, right? Maybe it's 2 or 3 months instead of 4 months. Maybe it's 5 or 6 months instead of 4 months, right? Nobody's here to predict anything, just trying to relate some possibilities going forward based on historical moves. History doesn't always repeat, but it does often rhyme. So we'll see how much we rhyme with the past, or do we do something completely different? Would be interesting to note, right? Looking back and come December, we'll see how this ended up playing out. But looking at the monthly chart, monthly speaks much more bigly than the daily or the 15-minute or your 4-second favorite 4-second chart. But looking at similarities is often cool to at least look at and acknowledge. So will we dip down here to 14K, 11K? Will we go under it? I don't see a whole lot of evidence for going under it. Maybe a wick, right? But candle closing under 11K, highly unlikely, just based on this chart. We will see what the future holds for us. But I'll wrap it up there for that. Let's go look at a couple of indicators here. On the monthly, the RSI. we're losing strength month over month over month, right? Where it looks like we're trying to bottom out here. But will we do it? I mean, this is going back to 2016 right here, right? So we had our, our bubble there. There's our all-time high, and next all-time high, and then going back down. Now we're at the lowest we've been in, six years, right? 6+ years. So obviously we have to bottom out at some point. There's no logical rhyme or reason where we would reverse that, but until we get back above 50, really, get back above the base of these kind of valleys, right? We're looking at, 55, 56 on the monthly. But, we're out of strength, right? Relative strength. You need this to go up before you can have any kind of big moves. And more evidence of that is look at you have to even like zoom out to get the stochastic monthly into frame here, right? Where we've bottomed out. Here's the bear market of 2018, right? Here's the bear market of 2022. We're here. How long will we last? Well, this one lasted a hot minute. Let's look at we were in from let's do the red, because the red is the average of the blue, okay? So we're looking at almost 400 days, right? 13 months, crazy, right? So if we did that again, right? Let's do it again. 400 days, same thing, right? We're looking at February of 2023. Will we repeat? Will we rhyme? Will we go shorter? Will we go longer? Right? But it doesn't just like gradually take off. Usually it goes pretty quickly, right? This is exactly what we want to be watching for. A bounce, a hard bounce to the upside. And then we can get things moving again, okay? That's what we're looking for. The ADX and the I suggest you use this. And what do we notice here? The bears have taken over on the monthly ADX and the I for the first time since 2015. That's very bigly, okay? So this bear market is proof that this bear market has been tougher than the rest, right? The bears have come out very bigly. Now we want to watch the bulls fight back, take out the bears. You want your grain to flip back up, and you want your ADX to follow suit, just like you see here, right? You want your ADX is your average directional index of whoever's on top, really. Real basic and easy. I would suggest using this on the weekly, monthly, cool. Anything shorter than that, it gets a little too flashy, fakey outy. All right, so that's the monthly Gaussian channel. Looking at our support zone, our history from 2018. Are we going to get this rounded bottom again? Well, we'll see, right? If we do repeat it exactly, we're looking at, November, December for a, some type of a rally for the bigger part, right? If we stretch it out, we're looking at, maybe February, March, right? Early spring, something like that of next year before we can start the run. Hopefully at least a year to 2 years of a bull run would be very, very nice. That's it. Let's get to the quote of the day. The traveler sees what he sees. The tourist sees what he has come to see. Could be deep. It's kind of a deep one. All right, car of the day, in your face. 57 Chevy Corvette convertible. Probably my favorite, old school Corvette. These are going up in value if, you find them in good shape. I mean, they're over 100K. So that's look about as brand new as you can get, I think. All right, car of the day, Bitcoin video update of the day. Appreciate you staying around this long if you have. I'll see you on the next video. You'll see me, I won't see you. But that's where we'll end it. Right here, right now.